What is a business plan? A business plan is a guide, a roadmap that provides directions so a business can plan its future and helps in the smooth functioning of the business. It is a plan which outlines goals and details about how to achieve those goals. The business plan is a written document prepared by the entrepreneur that describes all the relevant external and internal elements involved in starting a new venture. It is often an integration of functional plans such as marketing, finance, manufacturing, and human resources. A description of all the facets of the new venture is necessary to provide a clear picture of what a venture is about, where is it projected to go, and how can the entrepreneur plans to go about it. A business plan should give as much details as possible, but also these should be in concise manner so that the reader reads it completely. They are also a way for companies to keep themselves on track going forward. It aims at addressing both short-term and long-term decision-making and strategies for the first 3 years of operation. Thus, the business plan is sometimes referred to the game plan or road map. The plan answers the questions like, where am I now? Where am I going? And how will I get there? Business plan is required and requested by various stakeholders including investors, customers, suppliers and creditors, etc. Business plan is used by entrepreneur for various purposes. Business plans are important to allow a company to lay out its goals and attract investment. It can be used to get debt from banks, raise funds through securities and angel investors or venture capitalists. It helps the entrepreneur to be prepared in advance for the initial years of business as it provides blueprints of the strategies prepared by the entrepreneur. It describes clearly the goals and objectives of the firm and how can these be achieved. Entrepreneur can also set performance benchmark to judge the effectiveness of business plan. It can also be called as techno-economic feasibility study. Key features of business plan. There are few elements that should be included in a business plan to make it more useful for entrepreneurs and other stakeholders. These elements are as follow. 1. It should depict a clear description of product or services that your business is going to offer to the target audience. 2. It should give proper focus on important players of the market such as customers, suppliers, competitors, etc. 3. It should give data regarding sales forecasting, etc., which is very close to be real. 4. It should exhibit the distinctive features of the proposed market offerings, USP of goods and services. 5. It should clearly state the required strategy to implement the plan. 6. It should include details of required technical know-how and your plan to acquire it. 7. It should express the workability of profitability of the proposed business. Benefits of writing a business plan. The business plan is valuable to the entrepreneur, potential investors, or even new personnel, who are trying to familiarize themselves with the venture, its goals, and objectives. The business plan is important to these people because 1. It helps the entrepreneur to avoid a project that may result in ultimate failure through planning and research in advance. It is better and cheaper not to start a bad-fated business than to learn through a failed experience. 2. It helps to determine the viability and potential of the venture in a designated market where it is viable to start a business in that particular market or not. 3. It provides guidance to the entrepreneur in organizing his or her planning activities. It gives details about how to achieve the desired objectives and goals of the firm. It also provides decision-making and strategic guidelines to the entrepreneur about the first few years of the venture. 4. It serves as an important tool in helping to obtain financing. Investors need to know the parameters and the timings of the expected future revenue streams, the main outlines of the business to evaluate the risk and viability of the firm. Thus, with the help of business plan, entrepreneur can attract investors and raise funds through banks, equity market, angel investors or venture capitalists. 5. It also helps to find alliances if required to reach new markets, develop new products, etc. Other firms may want to know about the viability of the venture before entering into a long-term commitment. Business plan can help attract these alliances. 6. It also helps in attracting and employing experienced top-level employees and professionals. Requisites of preparing a business plan. It is important to first know the audience to whom the business plan should be addressed as to for whom the business plan is written. The business plan may be read by employees, investors, bankers, venture capitalists, suppliers, customers, advisors, and consultants. The actual content and focus of the business plan depend upon who is expected to read the business plan. Since each of these groups reads the plan for different purposes, the entrepreneur must be prepared to address all their issues and concerns. In some ways, the business plan must try to satisfy the needs of everyone, whereas in the actual marketplace the entrepreneur's product will be trying to meet the needs of selected groups of customers. In preparing the business plan, it is important for entrepreneurs to consider the needs of external sources and not merely provide their own perspective. While preparing business plan, the entrepreneur must carefully analyze the three main viewpoints. 1. First is the perspective of the entrepreneur himself, as he is the one developing the venture and clearly has the most in-depth knowledge of the creativity and technology involved. The entrepreneur must be able to clearly articulate what the venture is all about. 2. Second is the marketing perspective, which requires critical emphasis that an entrepreneur must incorporate while preparing business plan. Many entrepreneurs tend to de-emphasize the in-depth marketing information in their business plan. Too often, an entrepreneur will consider only the product or technology and not whether someone would buy it. Entrepreneurs must try to view their business through the eyes of their customers. 3. Third, the entrepreneur should try to view his or her business through the eyes of the investor. Sound financial projections are required for the business plan. If the entrepreneur does not have the skills to prepare the financial projections, she may get the assistance of outside experts. The business plan is valuable to the entrepreneur, potential investors, or even new personnel, who are trying to familiarize themselves with the venture, its goals, and objectives. The process also provides a self-assessment by the entrepreneur. Usually, he or she feels that the new venture is assured of success. However, the planning process forces the entrepreneur to bring objectivity to the idea and to reflect on such questions as, does the idea make sense? Will it work? Who is my customer? Does it satisfy customer needs? What kind of protection can I get against imitation by competitors? Can I manage such a business? Whom will I compete with? This self-evaluation is similar to role-playing, requiring the entrepreneur to think through various scenarios and consider obstacles that might prevent the venture from succeeding. The process allows the entrepreneur to plan ways to avoid such obstacles. It may even be possible that, after preparing the business plan, the entrepreneur will realize that the obstacles cannot be avoided or overcome. And hence, the business can be terminated while on papers and no time and money goes wasted. Writing the business plan. Like every other project, business plan writing also requires some preparation and should be carefully planned and systematically executed. A business plan should be comprehensive enough to give any potential investor a complete picture and understanding of the new venture, and it should help the entrepreneur clarify his or her thinking about the business. This will improve the quality of the final business plan, and it will also keep the things moving smoothly. Key elements of business plan. See Figure 7.1 to know all the elements of writing a business plan at a glance. Following are the elements of business plan writing. 1. Introductory page. This is the title or cover page that provides a brief summary of the business plan's contents. The introductory page should detail about the name and address of the company and the entrepreneur's telephone number, email address, and website address if available. It should also describe the nature of the business in brief, the amount of financing needed, and a statement of the confidentiality of the report should also be provided in this section. This is for security purposes and is important for the entrepreneur. This title page reflects the basic concept that the entrepreneur is attempting to develop. Investors consider it important because they can determine the amount of investment needed without having to read through the entire plan. 2. Executive summary. The executive summary lays out all the vital information about your business within a relatively short space, typically 2-3 pages or less. It is a high-level look at everything and summarizes the other sections of your plan. It should stimulate the interest of the potential investor and other stakeholders. It must be clear, concise, and compelling so that people will read further. This is a very important section of the business plan and should not be taken lightly by the entrepreneur, since the investor uses the summary to determine if the entire business plan is worth reading. Thus, it should highlight in a concise and convincing manner the key points in the business plan. 3. Industry analysis. The entrepreneur should analyze the environmental and industrial environment to be updated about the current status and future trends and changes in the market at both domestic and international level that may impact the working of the business. Any climate change, current government policies, changes in policies, economic trends to understand the purchasing power of target market, cultural and technological changes, etc. are analyzed and their impact on the products or services may be understood. Entrepreneur should also check all the legal requirements and procedure in advance to open a new venture. Most entrepreneurs generally face potential threats from larger corporations. The entrepreneur must be prepared for these threats and should be aware of who the competitors are and what are their strengths and weaknesses so that an effective marketing plan can be prepared and implemented. The entrepreneur can identify the potential threats from competitors through media, journals, social media, and their websites. The entrepreneur must consult government publication like MSME report, reports of various associations of industry like FICCI, ASSOCHAM, and marketing research organization like McKinsey, PwC, etc., and prepare detailed report pertaining to particular industry. The entrepreneur may consult these reports for understanding the recent developments in the industrial operations. 1. Introductory page. Name and address of business and entrepreneur. Nature of business. Statement of financing requirements. Statement of confidentiality of report. 4. Business description. General description of venture. Uniqueness of product and service of venture. Size of the business. Office equipment and personnel requirements. Goals and objectives of the business and milestones. 7. Marketing plan. Product packaging, labeling, branding, etc. Pricing strategy. Promotion, advertising and selling. Place distribution decisions. 10. Assessment of risk. Potential problems and weaknesses. Contingency plan. Obstacles and risks. 2. Executive summary. A brief summarization of whole business plan in 2 to 3 pages. 5. Production plan. Production process. Machinery and equipment required. Name of the supplier. 8. Human resource plan. Estimating manpower requirements. Job description and specifications. HR policy. 11. Financial plan. Profit and loss. Break-even analysis. Cash flow projections. Sources of funds. Income statement and assumptions. Industry analysis. Analysis of competitors. Market segmentation. Industry and market business plan. 6. Operations plan. Technology utilization. Identify location and flow of goods and services. Description of company's operation. 9. Organizational plan. Form of ownership. Authority responsibility relationships in the firm. Management team and key personnel. 12. Appendix contains backup material. Letters. Market research data. Leases and contracts. Price from suppliers. Figure 7.1 Key elements of business plan. 4. Business description. In this section, the description of the venture is to be detailed by the entrepreneur. It should begin with describing mission and vision of the firm. It should give clear idea about the scope and size of the firm to the investors. The new venture should be thoroughly described, along with its proposed potential operations. Functional specifications and descriptions should be provided. Drawings and photographs may be included. The potential advantages of the new venture possessing over the competitors should be discussed at length. Patents, copyrights, and trademarks, as well as specialized technologies, should also be included in this section. If the product is very technical, it will be important to make sure that its description is clear and easy to understand. The location of business is very important for its success, and thus, It should also be included in this section. 5. Production plan. A production plan is necessary for the manufacturing business. Entrepreneur needs to describe the physical layout of his production plant, the machinery and equipment needed to perform the manufacturing operations, raw materials and suppliers' names, addresses, and terms, costs of manufacturing, and any future capital equipment requirements. Discussions of these elements are necessary for the investors in order to ascertain the financial needs of the firm. If some or all manufacturing activities are to be subcontracted, then the name and addresses of the subcontractors, reason for selection and the costs, terms of contract should be disclosed in this section. 6. Operations plan. This section begins with describing what needs to be done to get the business underway. Every type of business, whether manufacturing, non-manufacturing, should include operations plan. It describes the production of goods and services and the flow of goods and services from producers to customers. It should explain the chronological steps in completing a business transaction. In addition, this would be a convenient place for the entrepreneur to discuss the role of technology in the business transaction process. It must state the strategies to acquire raw materials. 7. Marketing plan. The general marketing activities and approach that the company would follow should be outlined in this section. It describes how the products or services will be distributed, priced, and promoted. Marketing strategy, which is developed by conducting market research, should be discussed here. Market defensive strategy should be discussed here. Potential investors related to the marketing plan as critical to the success of the new venture should be highlighted. Thus, the entrepreneur should make every effort to prepare as comprehensive and detailed plan so that investors can be clear as to what are the goals of the venture and what are the strategies to be implemented for achievement of the goals effectively. 8. Human resource plan. This part takes care of the human resource requirement for the proposed business to be started. This covers both human resource planning at the workers level as well as at the executive level. The number of employees required to run the business is worked out. The detailed HR policy is prepared. What will be the compensation that will be given to employees at different levels is also decided so that the entrepreneur is clear about the HR outlay so that it can be made a part of the business budget. Initially, the human resources are kept at bare minimum, and as the business progresses, more human resources are added in the team. What will be the job description and job specifications for each position to be filled up is also worked out. The detailed process of recruitment and selection is worked out. What will be the method of performance appraisal, etc. are all worked out as part of human resource plan. 9. Organizational plan. It describes the form of ownership of the firm, whether it is proprietorship, partnership, or corporation. If the venture is corporation, it should give details about the shares of stock authorized and share options, as well as the names, addresses, and resumes of the directors and officers of the corporation. If it is a partnership firm, it should describe the partnership deed and the terms of the partnership. It is also helpful to provide an organization chart indicating the line of authority and the responsibilities of the members of the organization. This information provides the potential investor with a clear understanding of who controls the organization and how will other members be interacting in the performance of the managerial functions. 10. Assessment of risk. Every organization faces some risks and threats, and the investors may appreciate that entrepreneur have carefully analyzed and disclosed possible risks and threats that the venture may face. The investors may also find key strategies to overcome them. It is important that the entrepreneur makes an assessment of risk. Entrepreneur should explain the possible risks, the situation if those risks becomes reality, and the strategy that will be employed to prevent, minimize, or respond to the risks if they occur. Major risks can be from competitors' move, weaknesses in the marketing, production, or management team, and the technological changes. All these possible risks, if any, should be discussed in details with the key strategies to overcome them. 11. Financial plan. It is the most looked up section of the business plan. Most of the financial information and projected statements are disclosed in this section. It determines the potential investment commitment needed for the new venture and indicates whether the business plan is economically feasible. The entrepreneur, in this section, should carefully project the anticipated sales, possible expenses and the cash flow projections of the first 3 years. It should carefully state the financing needs of the venture for the first 3 years. The first year's projection should give details on monthly basis. The last financial item needed in this section of the business plan is the projected balance sheet. This shows the financial condition of the business at a specific time. It summarizes the assets of a business, its liabilities, the investment of the entrepreneur and any partners, and retained earnings. 12. Appendix contains backup material. The appendix of the business plan generally contains any backup material that is not necessary in the text of the document. Reference to any of the documents in the appendix should be made in the plan itself. Letters from customers, distributors, or subcontractors, copies of documents pertaining to incorporation, various permits and grants, documents of IPRs, graphical layouts of production process, etc. are the examples of information that should be included in the appendix. Detailed project report. Business plan that we have discussed so far presents the techno-economic feasibility of a proposed business idea. After the feasibility studies are carried out, a detailed project report, DPR, is required to be drawn up based on the data and results obtained from the studies. The preparation of the DPR is the final and most important stage of pre-investment phase of project. A project report is a detailed plan of action and particulars about the proposed project. The company will submit the copies of the detailed project report to the banks and financial institutions for their participation in the scheme of finance and also for working capital requirements of the project. A project report consists of analytical study of the proposed project and conclusion can be drawn about its viability. The promoter's capacity and competence will also reflect in the project report. The preparation of DPR is undertaken only after the investment decision is made on the basis of the technical, economic, and financial feasibility studies, so that the expensive efforts involved in the preparation of DPR are not wasted. Process designs, layout drawings and construction data are absolutely necessary for the preparation of DPR. The project report will be prepared for a plan of action to be undertaken which covers various aspects which are as follows. I. Technical. E. Financial. E. Marketing. IV. Management and V. Social. The outline and the content of DPR is the same as the techno-economic feasibility report. All the vital aspects of location and site costs, process, technology, market demand, plant capacity, product revenue, production costs, profitability, economic benefits, etc. must be covered in much greater detail in the DPR. The basic difference between the feasibility study report and DPR is the level of accuracy and degree of detail. Contents in detailed project report. A detailed project report, generally, contain the following information. I. General information about the entrepreneurs. Detailed project report begins with the introduction of the entrepreneurs. It contains basic and general information regarding the name of the entrepreneur, address of his residence, communication information, age, etc. When the entrepreneur approaches a bank or any other financial institution, he is a stranger to those parties and thus, his complete details must be required by those parties. It is obligatory for him, her to introduce himself, herself to those authorities. The main components that come under this section are 1. Name and address of the entrepreneur. 2. Contact information. 3. Date of birth and age. 4. Educational and professional qualifications. 5. Special and vocational training. 6. Qualities, skills, values, attitude and aptitude of the entrepreneur. 7. Family background. E. Introduction to project and industry. This section gives the introduction of the project. The entrepreneur is required to give details about the industry she wishes to enter and also analyze the competition available in the industry. The main elements under this section are 1. Industry position in the world scenario. 2. Industry position in the country. 3. Value addition by the industry. 4. Profile of the industry in the country. 5. Description of product selected. E. Project details. By the time entrepreneur prepares detailed project report, the location of the business must have been decided. This section gives description of the promoters of the firm, reason for selecting a particular location. The major components of this section are 1. Promoters. 2. Registered office. 3. Location of the factory. 4. Line of activity. 5. Background of other directors. 6. Scheme of project. 7. Land and site development. 8. Building and civil works. 9. Plant and machinery. 10. Contingencies to plant and machinery. 11. Utilities. 12. Miscellaneous fixed assets. 13. Vehicles. 14. Quality control and testing equipment. 15. Erection and commissioning. 16. Technical know-how fee. 17. Deposits. 18. Preliminary and preoperative expenses. 19. Working capital margin. 20. Schedule of implementation. 21. Management etc. IV. Raw materials details. Raw materials constitute major percentage of the production cost. Information about the raw material is to be compiled as given in the proforma below. The quantity and quality of raw material, its price, sources of raw materials and the reason for selecting a particular supplier etc. needs to be described in this section. The main components of this section are 1. Requirement of raw materials. 2. Situation of raw material availability indigenously. 3. Feasibility of import of raw materials. 4. Areas from which raw material can be procured. 5. Suppliers of raw materials. 6. Annual requirement. 7. Transportation of raw materials. 8. Varieties and grades of raw material. 9. Cost of raw materials and transportation cost to the factory. 10. Linkages with suppliers of raw material. V. Utilities details. Utilities do not form the part of the end product or service. The nature of the product and production process determines the type of utilities. An entrepreneur has to carefully analyze the requirements of utilities in advance. Utilities facilitate the production process and are constituted mainly by items like 1. Power. 2. Steam. 3. Compressed air. 4. Fuel. 5. Water. 6. Chilled water. 7. Effluent and waste disposal etc. Vi. Manpower details. A large percentage of the project cost is constituted by the labor cost, making it necessary for the entrepreneur to estimate carefully the manpower requirements and disclose the same in the detailed project report. It is customary to classify labor into categories like skilled, semi-skilled, unskilled labor and administrative staff. The wages and competitive wage rates should also be disclosed in this section. The major elements of this section are 1. Manpower requirement. 2. Organization chart. 3. Availability of manpower. 4. Total cost of labor. VII. Technical details. This section begins with factual description of the production program for the given time period, which is usually 1 year, which may extend up to 3 years. It gives details about the plant capacity and its utilization, a detailed description of the product in terms of its size, weight, color, taste, quality, packaging, usage, etc. It also describes technical details regarding the technology required and the expertise required for the same. The main components of this section are 1. Plant capacity. 2. Capacity utilization. 3. Manufacturing process with flow chart. 4. Plant layout. 5. Product description and properties. 6. Packing and its cost. 7. Technical know-how. 8. Plant and machinery details. 9. Plant and machinery suppliers. VIII. Financial details. The cost on account of land and building, machinery and equipment, working capital requirements, preliminary expenses etc. are to be estimated and enclosed in this section. This section should also cover the estimated financial position of the firm, its cash flows, projected sales and break-even point. It is also required to determine the profitability of the firm in advance in order to ascertain the return on investments to the investors so that they are enticed to invest in project. This section is the most important section as it provides financial and economic viability of the project and helps the investor in taking the final decision. The main elements of this section are as under. 1. Cost of project, with details to individual cost items. 2. Means of finance. 3. Assumptions made in financial projections. 4. Estimates of production and sales. 5. Estimated cost of production and profitability. 6. Estimated funds flow statement. 7. Projected balance sheet. 8. Statement of debt service coverage ratio. 9. Statement of computation of working capital. 10. Statement of break-even analysis. 11. IRR calculations. 12. Payback period calculations. 13. Return on investment calculations. 14. Debt-equity ratio calculations. 15. Promoter's contribution to cost of project. 16. Promoter's contribution to total equity. 17. Workings for financial projections. _X. Marketing details. This section begins with the description of the target market, preferences of the target customers, distribution channel, etc. The major components under this section are: 1. Present state of the industry. 2. Consumer preferences. 3. Market requirements. 4. Market segments. 5. Distribution channels. 6. Market characteristics of the product. 7. Export prospects and international market. 8. Marketing and selling arrangements. X. Project evaluation social angle. Finally, last section gives analysis of the project from social angle and its implications to the society. This section is important as the entrepreneur might get subsidies or tax advantages if they are providing any social benefit to the society. This section includes: 1. Analysis of critical factors. 2. Socio-economic benefit. 3. Labor availability. 4. Impact on ecology. 5. Foreign exchange earnings. 6. Value addition. 7. Import substitution. Let us sum up. Founders and owners typically develop an initial business plan before startup. They build the plan anticipating using it as a tool for supporting their requests for investment capital or loans to start the business. The business plan is a written document prepared by the entrepreneur that describes all the relevant external and internal elements involved in starting a new venture. A business plan should give as much details as possible, but also these should be in concise manner so that the reader reads it completely. It can be used to get debt from banks, raise funds through securities and angel investors or venture capitalists. The business plan is valuable to the entrepreneur to avoid a project that may result in ultimate failure through planning and research in advance. It helps to determine the viability and potential of the venture, provides guidance to the entrepreneur in organizing his or her planning activities. It is an important tool in helping to obtain financing. It also helps to find alliances if required to reach new markets, develop new products, etc., and attracting and employing experienced top-level employees and professionals. The business plan may be read by employees, investors, bankers, venture capitalists, suppliers, customers, advisors, and consultants. The actual content and focus of the business plan depend upon who is expected to read the business plan. While preparing business plan, the entrepreneur must carefully analyze the three main viewpoints. First is the perspective of the entrepreneur himself, as he is the one who develops the venture and clearly has the most in-depth knowledge of the creativity and technology involved. Second is the marketing perspective, which requires critical emphasis that an entrepreneur must incorporate while preparing business plan. Third, the entrepreneur should try to view his or her business through the eyes of the investor. A business plan should be comprehensive enough to give any potential investor a complete picture and understanding of the new venture. The elements of business planner: introductory page, executive summary, industry analysis, business description, production plan, operations plan, marketing plan, human resource plan, organizational plan, assessment of risk, financial plan, and appendix. The preparation of the DPR is the final and most important stage of pre-investment phase of project. A project report is a detailed plan of action and particulars about the proposed project. A project report consists of analytical study of the proposed project, and conclusion can be drawn about its viability. The project report will be prepared for a plan of action to be undertaken which covers various aspects which include technical, financial, marketing, management and social. A detailed project report, generally, contain the following information: introduction to project and industry, project details, raw materials details, utilities details, manpower details, technical details, financial details, marketing details, and project evaluation social angle.